Hi there, this is Alvin. I have very bad news for you for momentum trades this week. The reason is because the market has turned very bearish and the volatility has hit a new high. And we are talking about, in the past few weeks, the trade ideas that I've suggested, half of them has triggered a sell signal. So this is a very important update and I want to share with you how to manage the trades that we have talked about, right? And just for a disclaimer, please do not take any of this as investment advice or financial advice, right? I'm not a financial advisor. I'm just sharing what I see in the market and what I would do, right? So that is an important update. I hope you stay throughout the video and we see how you can react better given the current situation in the markets, right? So let's run through the 12 trade ideas that I've shared over the past many weeks and how the recent bear run or the bear rebound, the very fierce bear has returned and caused a sell down in a lot of the US stocks and even triggered some sell off in Asia as well. So let's start off with the first one, Eagle Bulk Shipping. So it's a shipping stock. It has been performing the best, right? It was up 18% in one of the weeks. And unfortunately, you can see in the last 4 trading days, we see a big down bar over here, second down bar, then this bar couldn't recover from all the previous highs, and then they make a new low, recent new low. Okay, lost a lot of percentage within a very short span of time, right? From about $76 to $58. We're talking about probably 20-30%, that kind of drop. That's very drastic. And the sell rule that I'm talking about is this moving average. This blue line is a 100-day moving average. So the momentum rule is that if the price is below the moving average, the 100-day moving average, sell. Okay, yes, even though the momentum is still positive, but you don't want to take chances. This might be the start of the collapse of the trend. And this shipping stock, to give a little bit of that fundamental analysis in this setting, is that the shipping rates have been falling since end of last year, right? And we could have seen some volatility over here, but because the shipping rates were still at a higher point and a lot of all these shipping companies were reporting good results, and that probably propelled the stock price a bit higher. But now the prices have gone down, and it's not just an inflation issue, right? When you see the freight rates or the shipping rates coming down, it also suggests that the recession is looming, because in the recession, lower economic activities, lower trade, and that's why shipping rates are going down. The demand is falling, and that's reflected in the share price as well. I think a lot of investors are not aware that this recession risk is actually a lot higher than ever before, right? We also saw yesterday that the 2-year bond yield and the 10-year bond yield, the differential has inverted. Okay, so the 2-year bond yield is actually higher than the 10-year bond yield, which shouldn't be the case. And usually when this bond yield inversion happens, chance of recession is very, very high, right? So even it's confirmed with a shipping stock like Eagle Bulk Shipping. It's not just this. You look at Safe Bulk, you look at other like Genco Shipping, all of their shipping share prices has fallen. Okay, so this is not a thing to be taken lightly with, right? I do think that the market is pricing for recession. It's beyond inflation already. So this Eagle Bulk Shipping is a sell. The next one, Mercer. This was a relatively newer stock that we added, right? We talked about in past few weeks, and this stock rebounded well, okay, for a moment, until the bear returned and the prices start crashing again. And similarly, this share price have fallen below the 100-day moving average. So Mercer is a pulp and wood company. So they do related to commodities, right? So they've been doing well for many months, but now, this also tells you that not all commodities are running anymore. And again, it's a sign that a recession is likely to come. Okay, the demand is likely to fall off, and that's what the stock market is pricing, because the stock market is always a forward-looking machine. It tells us where the economy is actually heading before the economy really show up that kind of figures and show up that kind of stats. So that's why I pay a lot of attention to how these different stocks in different sectors move. Okay, so Mercer International is also a sell at this point in time. And the next one is Geo Energy. This is one of the rare stocks that we mentioned that is outside of US, is listed in Singapore. This stock has been trending for a long time, if you can see, right? It's been trending since like 2020, end of 2020, and the trend has been great. and the share price have like gone up almost 4x, okay, 400% over a span of 2 years. So that has been a fantastic bull run because coal prices has shot through the roof, not just the oil prices, but lately we can see the weakness as well. Since the start of May, right, the prices have been coming down for geoenergy, and then eventually it crosses the 100-day moving average 3 days ago. Okay, 3 days ago that has already happened, and this is also a sell, right? And who uses coal the most is China. China is the largest electricity consumption country in the world, and they mainly use coal as a electricity generation source. And with coal prices going down, right, likely linked to the China's lockdown in the last 1 month or so, and that's why the coal prices, production has gone down, demand has gone down. And again, if we use this as a forward-looking kind of a predictor of the economy, that means that it is very likely China economy is slowing down too. Not surprising with all the COVID lockdown, right? But the politicians are still very, very confident of that over 5% GDP growth this year, right? But the market seems to suggest that it is not the case anymore. Okay, so even for geoenergy, coal prices, this is a sell. Next one, Dow Chemicals, and you can see this drop is even worse. There's 2 gap down, and the second gap was even bigger than the first gap. This is a very, very bearish move, and it's not only dropped below the 100-day moving average, it's dropped past the 200-day moving average. Okay, so it is not a time to talk about profits. This is time to talk about capital preservation, right? So because when the trend reverses, it is better that you sell and take that protection of the capital, right? Protect as much as you can, and not hold it and just let it tank and deplete your capital in that way, right? Because a lot of all these stocks are not meant for long-term holdings. They are for short-term trading, and short-term I mean weeks to months. Whenever this sell signal comes up, it's better to sell them. Okay, unless you're talking about your long-term investment, okay, those are a separate category, right? So I'll leave those to you whether you want to decide to hold or sell, right? But for momentum stocks, you are supposed to sell whenever the momentum drops off. Okay, so Dow Chemical, obvious, better get out. It's going to get worse before it gets better. CF Industry, it is fertilizers related to that, right? Have a fantastic run because fertilizer prices have gone through the roof as well, commodity related stuff, but it has peaked. Okay, so another clue is that I believe what I gathered from all these stocks, right, that a lot of these are inflation play, and they have come off the top, and that actually tells me that it is likely that inflation has peaked. Okay, it doesn't mean inflation will come down, right? Just that it's likely has peaked and unlikely to go up significantly. But the bigger fear is the drop in demand due to a recession that is looming. Okay, so even for CF, CF industry, fertilizers focus, it is also a sell, right? It has gone below the 100-day moving average. Next one, ADM. This is a raw material company, a lot of food products, right? Some of you might be familiar with this. It's quite a well-known name, and you can see it has came off the top and now is below 100-day moving average. This is also a sell. So we can see quite a number of, in fact, so far, all these stocks that we sell are related to the inflation theme play. Okay, so this is to tell you that the inflation play is likely done, right? Unless it come back stronger again. Else, I do think that the inflation theme play is done. Okay, some I believe were very bullish. They think that inflation will last for another few years or so, right? But from the stock market perspective, it has likely peaked. Okay, and let's look at the oil companies, right? Oil companies has also saw a drop, a gap down. This is ExxonMobil, right? It's also one of the ideas that we shared in the past few weeks. It didn't drop below the 100-day moving average, so it is still a hold at this point in time. But I am not very positive that it can stay above the 100-day moving average for a long time because a lot of other commodities have been dropping. And if we look at the oil-producing country, right, like UAE stock index, Saudi Arabia stock index, they have also fallen below the 100-day moving average, right? So they are all related to oil plays, and if they show the path that they are going down, right, I believe these oil majors are unlikely to hold up anytime soon. All right, so that's ExxonMobil, same as Chevron. Okay, you can see there's a gap down and a very big down bar. These are very bearish move. Okay, so it will likely at least test the 100-day move average, and if it cannot hold, it will break below, and that is a sell by that. Okay, so this is a time to play defensive. This is not time to be aggressive, right? This is natural gas, okay, still quite high up from the moving average. Okay, so these are more closer to the commodity place itself, because these are ETFs that are buying the futures contract of all these commodities. It is unlike a company that is some investors may be looking at the profits and the revenue and some of the management, but when it comes to all these kind of ETFs, which we also suggested these ideas, I think last week, okay, 3 ETF ideas on commodities, they are doing better. Okay, they are holding up well, right? But that said, they are also not going much higher. Okay, so that's why I do believe that inflation has peaked. And this is wheat. Wheat is also holding above, and corn as well, right? So this is what the picture looks like at this point in time. So a lot of the stocks are being sold down. Okay, some may argue that, oh yeah, you see, if the commodity prices are holding up, you know, stock prices are going down, it's just because of a contagion, the bearishness of other stocks that's interfering with the other commodity related stocks, which should not be the case. Then it should be a buy, right? But for me, I based on my observation in the last not just 1 week or so, right, it's a whole month plus even 2 months before where we are right now. I think the commodity prices are not really moving. They have been stagnating, okay, for the past 2 months. So I do believe that the inflation numbers are likely peaked, okay, has slightly peaked, and it is time to be defensive and not going so aggressive into inflation play at this point in time. And lastly, we also talk about this insurance company, W.R. Berkley, all right, and same thing with the broader stock market. The stock prices have came off, and it seems like it's heading for the 100-day moving average, right? So I think this also can't hold much longer. A lot of the finance stocks have fallen as well, right? Some below the 100-day moving average. So you can see out of the 12 ideas that we mentioned, we are at a point where it is very bearish. A lot of them have showed trend reversal, and a lot of all these ideas are actually inflation themed, and they have all fallen apart too. All right, so just want to end off with some big picture. Okay, this week I'm not going to give you any trade ideas for momentum, because I think it is on more of a sell mode, capital protection mode, rather than aggressive buying mode. All right, a lot of them has fallen, and even the very strong trending commodity stocks are falling as well. S&P 500 has made a new low, a recent new low this year. All right, so you can see they also suffer from gaps. Okay, so these are very, very bearish movement, and it is not easy to bounce back and cover the gap so fast, right? I think it will take some time, and then if another rebound comes, it's likely also to be a dead cat bounce. Okay, so that's my view. I think the downtrend is still intact, right? In the past few weeks, I've been mentioning it. I say this rebound, okay, because we were looking at this rebound last week, right? We say that it is not out of the woods yet, right? Because it is still below the long-term moving average of 200 days, and that itself is bearish, right? Until it can break above the moving average, then it's considered more bullish, right? So now they have just sunk further. Okay, so that bear is getting stronger, not getting weaker. And QQQ, same thing, right? Make a new low. Okay, make a new low. Okay, bonds didn't recover, drop, right? They were saying that, oh, you know, interest rate seems to be like the rate hike is within expectation, and there's some hope for the bonds, but nope, it just went down and make a new low again. Gold has not been holding up well, right? It's been below the 200-day moving average already. Okay, so that's also a bearish sign. And let's look at the sectors, right? Materials is down. Okay, don't need to talk much about it. Communication services, which have a lot of internet company, is down a lot. And this is energy. Okay, energy stock. These are very important because this sector has been the best performing one among all the other sectors. And yet you can see this gap down and a big down bar. Okay, so if this don't hold, a lot of this is representative of all the oil and gas company, right? And if this don't hold, that means that even the last stronghold of energy stocks is gone, and that means that any long momentum is likely we won't see any opportunities, right? So that's why I'm suggesting that it's time to sit out at this point in time. If you are doing momentum, there isn't much there anymore. Okay, there's no one safe sector. This is financial, right? That's why I also think that W.R. Berkley is likely to fall. This is industrial, below 200-day moving average. This is consumer staples, is also below 200-day moving average. It's supposed to be defensive, right? But it has gone down as well. Utilities, very big down bar, below 200-day moving average. very, very bearish, right? So no matter which sector you're looking at, they are all below that 200-day moving average. Healthcare, consumer discretionary, the only sector left is energy, and we already saw energy weakness as well. Okay, so that's what I think is going to price for recession. And if that big R issue is coming up, expect more sell downs to come, right? And meanwhile in China, okay, they also have suffered a little bit of that correction after a very strong rebound, right? But it is something positive, okay? As long as they can hold, they didn't go down as much as the US, right? So it seems like there is some strength in China. And if that happens, okay, if the momentum continues in China, we might have a good news, right? We might not be able to do momentum momentum position on the US stocks, but we might have opportunity in China. But at this point in time, it's too early to say, right? So that's why I'm not going to give you any trade ideas this week. I think now it's time to cut position, right? According to the trend, those that have 6 out of 12, right? Those that I mentioned, just to repeat, the Eagle Bulk, Mercer International, Geo Energy, Dow Chemicals, CF Industry, and ADM. Okay, so these 6 are below the 100-day moving average. They have triggered a sell signal, and the rest may not hold. So it is also time to monitor them, not a time to add position or what. All right. So that is what I'm going to cover. Okay, sorry for the bearish news, but is not within my control because the market does what it wants to do, and it's time to really stay strong. Okay, and if you are supposed to sell, better sell, because momentum stock, when they collapse, they can collapse a lot. I hope you are able to do it, right? Don't just blindly think that holding a stock can always recover given enough time. Some stocks may not, or some stocks may take too long a time, right? It's not just worth holding. Okay, so you must be a disciplined trader if you're doing momentum, or in fact any other trading strategies. Okay, there are rules to protect us, and if they sell, we should sell. If it means cut loss, we should cut loss, right? So with that, that's the end of today's session, and I hope you like it. Do remember to subscribe to the channel, and if there is new momentum trade ideas, I'll be sharing with you soon. All right, so this is Alvin. I hope to see you around. Goodbye.